the Federal Reserve and other investors are looking at and telling us about what's happening right now in the Middle East. Now, when we look at the stock market and we look at what's happening on Wall Street investors believe that the war on Israel right now will not directly affect our stocks and it won't affect inflation, at least pre-anticipation. Now, what it will do right now, what they're already talking about, it may halt the steady increase of interest rates going up. The war in the Middle East is heating up, and how is it affecting the U.S. real estate market? And the question is, will you be affected as an investor, as an end home buyer, and how will it affect interest rates and long-term buying is the big question that real estate investors are looking at right now, and they're wondering and anticipating on the threshold how the war in the Middle East is going to affect what we're doing here on the real estate sector in the United States, on our banking sector, on debt and everything else. Now, I still believe that it is still too early to tell what the effects of the war on Israel is going to have on the United States. Now, in times past, when you look at World War I, you look at World War II, you look at the Great Depression, and you look at these times where there's economic instability based on war, the market tends to falter a little bit. And let's go through today's real world and where we're sitting right now with interest rates, the bond yield, and what Jerome Powell, the Federal Reserve, and other investors are looking at and telling us about what's happening right now in the Middle East. Now, when we look at the stock market and we look at what's happening on Wall Street investors believe that the war on Israel right now will not directly affect our stocks and it won't affect inflation, at least pre-anticipation. Now, what it will do right now, what they're already talking about, it may halt the steady increase of interest rates going up. Now, that could be a really good thing because the Feds had already announced in prior months to expect 2 more interest rate hikes before the end of the year, one in November and one in December. And now, what Wall Street investors are talking about and what they're anticipating is the fact that the Federal Reserve is going to halt any additional interest rate hikes between now and the end of the year. Now, although Jerome Powell has come out and said that we will see where we are as far as inflation and to expect at least 1 more interest rate hike before the year end in December, meaning that we possibly will not see any interest rate hikes in November and possibly not any in December, depending how things transpire. Now, I don't want to promote war, and I hope that the war actually comes to an end sooner than later. But through unfortunate circumstances, this is what we look at, is we want to see how this affects our economy. Now, with the war right now, we know one thing, that war typically increases the barrel cost of oil worldwide because it typically affects its production. Now, what they're telling us right now is that oil is not going to be affected as long as the war doesn't go into areas where they're actually drilling and oil is being exported. Now, if it does, it can affect oil prices, and typically when oil prices go up, that's when inflation happens. And so right now, it's not being affected. Now, I will tell you that as a real estate developer and as a real estate professional, I would vote to say open the Keystone Pipeline, because if we open the Keystone Pipeline, we have enough oil reserve right here in our own country in the United States to service our country for over 100 years domestically without having to import or export overseas. And so we have the natural resources, and if our government sits back and says, yes, let's pump oil, that in itself will decrease inflation and steadily plateau our inflation market and help us move forward with things. Now, look, ladies and gentlemen, we're looking at this in current circumstances. And when we look at the U.S. American bond yield right now, we're sitting between 4 and 5%. It's higher than it's been in almost 2 decades. And so when we look at this, what does that do to interest rates? Because when bond yields pay out so much money, the cost for debt becomes very, very, very expensive. And that's what's putting the downward push on homeowners and businesses. So both are being affected right now by what's happening. And as long as bond yields are giving large dividend returns of 4%, 5%, we're going to see high interest rates. Right now, we're sitting at 7.8%. We're at a 20-year high right now. We haven't seen interest rates this high in almost 20 years. And so we're sitting back going, okay, we have to find a threshold other than war that's going to soften interest rates. And the only way interest rates are going to soften is if we can get inflation set in place. place. Now, in spite of the war, the U.S. market and the U.S. economy doesn't look like it's cooling off anytime soon. Now, the housing market and the need for housing, especially affordable housing, being one of the predominant aspects of what is driving the economic sector right now, and the mass need for supply and demand, and that us not having enough housing demand is what's driving our economic stimulus right now that's making things pump. As you look behind me here and you see housing going in, this is happening across countries all over the world and all over the United States specifically. And so understand that it's very important to realize that inflation isn't going to go away anytime soon. So if you're a U.S. investor and you're looking for a break in the market, this may be your chance to be able to get into the market at a plateauing interest rate for the time being, but it doesn't mean that we're going to have that long term. I foresee that at the end of the year, we see one more interest rate hike before we see all of this start to plateau and interest rates level out and start to actually come down into 2024. Now, in spite of the war, ladies and gentlemen, historically, in times of a 4-year election, interest rates typically go down. And so my projection is still for the 2024 election that the interest rates will drive their way down slowly, not quickly, but showing that the U.S. economy is showing even more strength economically and where we are. And so if history tends to repeat itself, 2024 should shed some light on the true colors of what's going to happen with interest rates and where they'll plateau as we move into the new year of 2025 out of the election year. So ladies and gentlemen, point being, is that the war in Israel will affect what we're doing in the United States. In fact, it may even plateau our high interest rates and inflation for the time being, but we want the war to end. It's not a time to contract from the market. It's a time to invest. It's not a matter of whether you should be investing, it's what you should be investing in. And as I stand in front of multifamily housing in the affordable housing sector, it is the #1 most praised asset class by investors today. Make sure that you're paying attention, you're investing right. And if you haven't already, click and subscribe to our YouTube channel and pound that thumbs up button if we gave you any relevance to the current state of the market as it relates to what's happening in Israel and the war that we're going out and the war as it sits today. Ladies and gentlemen, click below, subscribe to our YouTube channel, and we'll see you next time.